Morning everybody, Mike Niemiec here with some early morning grain and oilseed comments on this Monday, September 9th. The overnight trade, kind of a little bit on the softer side, down around 2 cents in the winter wheats, unchanged in spring. Corn market's down 1, beans are down 2, the meal market's down roughly 50 cents, and the oil market's down around 15 points. And this comes on the heels of somewhat of a softer week last week for grain and oilseed prices. We're going to have a USDA report coming out. It's USDA week this week on Thursday. The average trade guess for the corn yield is 167.2. That's down from 169.5 a month ago. And soybeans are also a little bit lower at 47.2 versus 48.5 bushels per acre a month ago. But once again, nothing too radical at this point in time as far as carryouts go. They're still looking for an old crop corn carryout of 2.4 billion bushels, for the beans 1.0, and for the new crop wheat ending stocks in the neighborhood of 1.0 billion bushels there as well. People now are still a little bit gearing up for the October report as opposed to the September report as far as getting a better handle on yield and or on acreage. Political news: China reported their trade with the U.S. shrunk for August, with imports of American goods down 22% versus a year ago. Their exports to the U.S. were down 16%, so the trade war is taking a little bit of a dent as far as trade goes, obviously. U.S. ag groups told President Trump the proposed biofuel reform program, which wanted to be increased by £1 billion for the 2020 calendar year, was falling short of their expectations. And then there was that wire story about that the U.S. and Japan corn deal has one flaw, that Japan doesn't need the corn. So anyway, the political is still kind of murky at this time. As far as weather goes, they're looking for average to above average precip in the northern 2/3 of the Midwest. And as far as the 6 to 10 day for temperatures, they're looking going from average to above average, so no frost in the details for that. Our business year to date, as far as exports go, our corn sales are running 18% behind a year ago. Our beans are running 17% behind, so not very good in that department. We are running ahead in wheat, 22%, but we know we have a lot of competition out there from foreign competitors. More importantly, our new crop corn and bean sales on the books right now as we start the new marketing year, we only have 6 million tons of corn versus 12 million a year ago, and for beans around 6 million versus 14 million tons, so we're not off to a good start there as well. Other news: China, good news, bad news. China reported that their August imports of beans were almost 10 million tons, up from 8 million a month ago and versus 9 a year ago. But they've only bought 56 million tons of beans so far on the year, versus down 9.2% versus a year ago. Export prices for Russian wheat fell for the 6th consecutive week. So nothing very good happening there. Ukraine's grain exports year to date, almost 10 million tons versus 6 million tons a year ago. Once again, the obvious as far as foreign competition goes, us needing to go and do export business. We continue to see registrations get canceled. We canceled 216 soft red winter wheat, 12 hard red winter wheat. We also canceled 77 soybean oil and 3 soybean meal. Our commitment of trades report that came on out shows that the trade is net short or getting shorter. 15,000 soft red winter wheat, 156,000 corn, 81,000 beans, 46,000 meal, 19,000 soybean oil. And if you look at past history, they got more room to roam on the downside if warranted. So unless the USDA report radically changes trade opinion, it looks like we remain in a non-bullish environment, capped by pivotal price areas. These are my opinions, not that of ADM or ADMIS. Have a good week.